Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on the technology sector, XLK, Apple, and Facebook. So the bulls buying the dip yet again, and that is a common theme the 3 of the past 4 days. Long lower wicks. Bulls remaining in control as long as they keep buying these dips. And we do have a higher low pattern to be keeping an eye on. First it was 52.55, moved up to 52.57. And now it's the low of today, 52.84, as the middle Bollinger Band continues to catch up. We haven't even tested that level for 2 months at this point, showing the strength of the technology sector. So that's going to continue catching up. And the bulls are looking to break 53.22, that little double top. And tomorrow the FOMC is pretty much either going to break the higher low pattern on the daily time frame, or we're going to get a bull break of that double top and continuation to the upside. Weekly time frame continues with higher lows and higher highs. We do still have that double top to be weary of, but as of right now, there's no concerns. If we were to see that double top remain and we break 52.84, then the bulls would start to be concerned in the short term, as that would break the higher low pattern and our resistance level would be very clear at that point. So Apple is seeing the benefit of the technology sector. Really all the tech names are. But Apple saw some further upside today. A new resistance point is 139.65. You can see how very tight we have been 3 days in a row now. And the bulls are still holding these exponential supports just barely. And the middle Bollinger Band continues to catch up. So that middle Bollinger Band, 137.75, that's my guide for the bulls remaining in control on the daily time frame, as it has held all of 2017, only being touched twice. Both times it was touched, we saw bulls buying the dip in a big way. So watching that middle Bollinger Band, if we do see some downside and a bearish reaction to the FOMC, we will likely test that level. And we have a clear resistance point, 139.65, 140, and 140.28. The weekly time frame inside candlestick last week, inside candlestick this week. The ranges continue to tighten without a clear break anywhere in sight currently. Facebook, bulls buying the dip today. We did break the higher low pattern. We had been forming higher lows on the daily time frame 6 days in a row. That broke once 138.67 broke today. So that was a potential signal to exit as a bull. And personally, heading into the FOMC, I much prefer to be cash rather than take any gambles and then make my entries and trades based off of the reaction to the FOMC. So that would have been enough for me to exit a swing bullish position, just wanting to be clean and clear of everything with a nice clean slate heading into the FOMC reaction. But the bulls did buy the dip, so if you are a bull and rationalize that, that's certainly understandable. The bulls bought the dip, and here we are closing just a wee bit here, 36 cents below the all-time high. So the bulls could absolutely continue to these all-time highs. And the good thing about this sideways consolidation is it allows the upper Bollinger Band to continue to ascend, which has been rejecting the price for about 3 weeks at this point. And it now has some room to the upside. It's going to be in the mid 140s come tomorrow. So the weekly time frame still very strong for Facebook. It's stronger on Facebook than it is currently on Apple and XLK. Facebook was a bit of a laggard before the bulls really took charge and started following the tech sector in Apple. So it is the strongest in terms of the weekly time frame. Very tight range this week with only two trading days gone by. It would be very easy to form a bearish reversal candlestick this week, so we do need to be keeping an eye out for that. And the reaction to the FOMC should dictate what we can expect on this weekly time frame. So the bulls are still positioned really well in the markets, in the tech sector, in the financial sector, and it's going to be up to this reaction to set the rest of the tone for the week. So we'll continue to check back in. We'll be live for the FOMC at 2 p.m. Eastern. I appreciate you all watching and hope you have a great night.